Morning, ladies and gentlemen. I'm here today to introduce you to Red Lake, Ontario. As Eric said, I did work in Red Lake at the Campbell mine. It was about 20 years ago today, and I was working underground and I learned a new term. They called it 10-foot gold. So what does that mean? Well, every day we'd go underground, we'd walk underground, we'd go to the drifts, and we'd see what had been blasted out from the day before. And every round you took or every advance you made underground was 10 feet. They drilled 10 feet, they blast it down. We'd go down, we'd wash the face and the back and scale it off, and you could see the gold from 10 feet away. And it's a pretty remarkable thing. I went over the next 20 years of my career, and it's really incredibly rare to find grades like that. So at the same time, 20 years ago, there was a brand new company just across the fence. It was mining the exact same ore body. That company was Goldcorp. And so Goldcorp was founded by Rob McEwen in Red Lake on the Red Lake mine. And it was a fledgling company, but they were in the early stages in 1996 of drilling off what would ultimately become the high-grade zone. The high-grade zone sat in the footprint of the Dickinson mine for 50 years before it was discovered. And it fundamentally transformed that mine. They went from 50,000 ounces a year to, once they developed the high-grade zone, to producing 600,000 ounces in a single year. It was a grade of 60 grams per ton, or 2 ounces per ton. And that launched Goldcorp. Goldcorp is the senior producer that it is today because of that discovery in the Red Lake camp. So that is the opportunity of this Red Lake camp. We'll fast forward now to 2012, and I was managing an early stage exploration company and having some difficulty attracting attention. We're in the midst of what we've talked about earlier today, but in the midst of a bear market. And frankly, nobody wanted to hear about early stage exploration. So I sat down with Mark O'Day. Mark O'Day is well known to many people in this crowd. He's the founder of Frontier Gold, of Aurora Energy, True Gold, which is presented here before. So what may be less well known is he also had his origins or his start in the Red Lake camp. So we're talking about what kind of project we could bring into the company. What could we build a company around? Something that could survive in difficult markets as well as thrive in buoyant markets. And so we built a bit of a checklist, and number one was high grade. We wanted to acquire a project that was very high grade. Secondly, we wanted to be in a good, strong, mining-friendly jurisdiction. We wanted to have access to infrastructure. So we wanted to be able to move a project forward on a year-round basis and move it quickly towards production. And so we bounced around a lot of different ideas, and ultimately we came back to what we knew best, and that was Red Lake. And so went out in 2012 to pursue the Madsen gold project. It was a long pursuit. It took about 18 months before we ultimately were successful in acquiring the project. And in the end, we paid $11.2 million in cash and stock. Difficult markets often bring good opportunities. So what did we acquire for $11.2 million? Well, we acquired the past producing Madsen gold project. Produced 2.5 million ounces historically at a grade of 10 grams per ton. It's the second largest past producer in the Red Lake camp. The land position, 45 square kilometers, makes us the third largest landholder in the Red Lake camp. It also comes with a current resource of 1.2 million ounces at 10 grams per ton. That includes 900,000 ounces of indicated at just under 9 grams and 300,000 ounces of inferred at 11.7 grams per ton. It comes with infrastructure. That includes a 550 ton per day mill. It includes a shaft down to 1.2 kilometers and 67 kilometers of underground workings. And it also includes a tailings facility. And what's more is the project is permitted as a mine currently under temporary suspension. So what does that mean? Well, the mill is not currently operating. We're not producing gold, but we have that permit to move forward back into a producing state in a relatively straightforward fashion. So we acquired the project with a view that the Madsen project also had fantastic opportunity for new discovery. And I'll walk you through why I feel even stronger now today that is true. So the first thing we did was we wrapped together a pretty strong technical team. If you look through there, you'll see a common theme, and that is Red Lake experience. Very strong technically in Red Lake. When you look at the board and management team, collectively over the last 5 years, have been involved in over $5 billion in M&A activity. So also very strong on the strategic and capital markets side. From a share structure perspective, 170 million shares issued and outstanding. The project was acquired through a financing. It was $18.6 million raised. It was a 25-cent unit financing. All of the board and management participated in that initial financing. It came with a half warrant priced at 50 cents. That warrant was set to expire in September of this year, and we had near 100% conversion. That brought in $19 million in cash proceeds, and so we're well financed to move the project forward. Key strategic shareholders include AngloGold Ashanti at 12% and Rob McEwen personally at just over 10%. So this is where we're located. It is Red Lake, Ontario. It is a relatively small camp, but it's produced 28 million ounces of gold historically over an 85-year mining history. It is the highest grade gold belt in Canada and arguably in North America. Primary producers owned by Goldcorp are to the north, the Campbell Mine, the Red Lake Mine, and Koshner Mine. We sit on the south end of the camp, centered on the Madsen Gold Project. We also have the Stuart-Olson Mine on our property. And we feel that the south end of the camp has seen significantly less exploration and thus presents the opportunity. We've got a photo here of the site. You can see in the foreground, the blue building there is the mill. It's not the original mill. It was acquired in the late 1990s and moved to site. It's a simple mill, SAG mill, ball mill, leach circuit with a CIP finish. Behind that, or beyond that, you see the head frame sits over top of an underground ore body that would run left to right across the page. To the right side, just off of this image, is the tailings facility, and to the left, just off the image, would be a portal with a ramp. Some more shots of the infrastructure here, the interior of the mill in the top right, tailings facility in the bottom right. Portal is shown in the top left. I highlight that because I'll talk a little bit later in the presentation about a preliminary economic assessment that we put out earlier this year, and that envisions taking that ramp and pushing it down to 600 meters. Currently has a rock cover on it, which you can see right now, and we've recently applied for permitting to remove that rock cover. We anticipate having approval to do so in December, and then next year we'll be underground, reestablishing mine services and launching an underground exploration program as well as a surface exploration program. Resource is shown here. This resource is defined by 13,500 historic drill holes. The average spacing underground is 7.5 meters. Geological model is built from 24 levels of underground mapping, and so we feel very comfortable with the resource that you see here. So we'll step into some of the, what I see as the high-grade geological opportunity in the property. We're showing a property outline here with a black line, again 45 square kilometers. I highlight two features on here. There's a thin red dashed line that bisects the property. This is an important feature in the camp. It's a structure, it's a gold-bearing structure, and you want to be near it. So when you look on our property from, as we move from south to north, you start at the south end, you have the Stuart-Olson Mine. That produced for 8 years, it last produced in 1956. The Madsen Mine, sitting in the center, as I said, second largest past producer, was a successful mine. It produced for 36 years. Last substantive production was in the mid-1970s. There was an attempt at a restart in the late 90s, but as we all know, gold prices were very depressed at that time. Move up beyond that towards the north, you have the Howie and Hasaga mines. These are the first mines in the Red Lake camp. You want to be very close to this structure. I also highlight a dark-colored unit there. It's called an ultramafic. It's not really important. What is important is the high-grade zone that I described earlier at the Red Lake Mine lay along the contact of one of these rock units. We think it's highly prospective, and we think there's evidence at Madsen for a similar style of mineralization. And I'll show that in the next slide. So the next slide I'll show will be a cross-section. It means it's a slice through the earth. We're going to be looking towards the north, and it runs through that dark-colored unit and through the Madsen Mine. So on here, we identify all the key features. This is a cartoon. It's simplified, and everything's projected onto the plane. You can see that big gold-bearing structure off to the right, labeled the unconformity. Just to the left of that, in the footwall, as we call it, is the Austin. The Austin Horizon was the key producer at the Madsen Mine. It produced for 36 years, well over 2 million ounces from surface down to a depth of 1.2 kilometers. Now, what you don't see on here is that, and this speaks to what Eric introduced as coloring outside the lines and outside the plunge lines. What you don't see here is that Austin Horizon plunges to the north. So what that means is in 1930s, when they discovered the ore body, they put the shaft right on top of the ore body. And this one actually worked. They started to mine and was successful, as I said. But as they mined deeper in the mine, that Austin moved further and further out of this image towards the north. So at the bottom of the shaft, 1.2 kilometers down, they had to drift 2.5 kilometers to the north to access the Austin. And that's why the mine shut down. It was the time that it took to develop out to the Austin and the cost of capital to develop out to the Austin. The ore body is open to depth. There's mining down below the bottom here that suggests it's open, and we have a deep drill hole that intersected the Austin at 2 kilometers below surface, returning half-ounce grades in that Austin Horizon. And that is significant. When you think about the high-grade zone at the Red Lake Mine, it actually started below a depth of 1.2 kilometers. They're currently mining there at 2.5 kilometers. So that's a real opportunity, but it's an opportunity for the future because it's very expensive to explore at that kind of depth. What we did is we had a look at the footwall where we have labeled here the McVeigh horizon. Now the McVeigh is a parallel ore body, parallel to the Austin. It looks identical, and it was only mined historically to an average 100-meter depth. So about a year and a half ago, I asked the team to explain two things. I wanted to explain why does the Austin plunge to the north? Why does it move forward to the north as you go deeper? Secondly, I wanted them to try and explain why was the McVeigh only mined historically to a depth of 100 meters? So they first looked at the Austin, and it was a geological question, but it was pretty simple. You have a group of rocks that the gold wants to be in. It's intersected by a gold-bearing structure, and that intersection line runs north. So we could explain it. But what they found was that same intersection line in the McVeigh runs south. So that was a key understanding, a key breakthrough in terms of our understanding. The Austin plunges to the north, the McVeigh plunges to the south, and so with every step they went deeper in the Austin, they were leaving the McVeigh further and further behind. So we call it the missing half of the ore body. We started drilling that early this year, and the first holes proved the concept. We've now demonstrated that the south plunge is real within the McVeigh, and we've continued to become more aggressive with our drilling as our certainty has become stronger. We're currently in the midst of a 4-rig, 77,000 meter drill program with the goal of adding additional resource near surface and within the footprint of the ramp that you can see on this slide. So before I step away from this, I'll also talk about the 8th zone resource that you see towards the bottom of this image. The 8th zone is Madsen's version of the high-grade zone. It sits in that same environment, the same geological environment that hosts the high-grade zone. It's there, it's in situ, it's 300,000 ounces running 15 grams per ton. Now our predecessors spent a lot of time and money exploring and looking to expand that 8th zone at depth. They went underground, they dewatered the shaft, they were on 16 level drilling it off. We took a very different approach. We said, if it exists at depth, why couldn't it exist closer to surface? And so we pointed it up towards surface, went and looked on the ground and saw a lot of things that we wanted to see. We put the first modern drill holes into the area we've labeled here Russet South in February of last year. Our first hole was 3.5 meters at 9.5 grams. The second hole was 11 meters at 8 grams. These are both 75 meters below surface. We stepped 200 meters to the south while we were trying to figure out what we had hit, and we drilled 3 meters at 40 grams per ton, sitting 10 meters downhole, effectively right at surface. And importantly, on the same contact, 1.6 kilometers up plunge of the 8th zone at depth. And so another very exciting discovery for us. So I'll step back now to the McVeigh, and I'll show an image here that tries to show what I tried to explain in words. So we've got the Austin horizon sitting in the front. You can see that right or northerly plunge that I described. We've stylized some underground workings on here with the shaft accessing the Austin. In the background is the McVeigh, identical in terms of mineralization, and it plunges to the left or to the south. And so you can see as they were mining deeper in the Austin, they would have been missing the McVeigh horizon. So we'll look at what we describe as a long section, which is along the plane of the McVeigh on the next slide. We'll strip away the Austin, which sits in front, and you get a sense of that south plunge. So here the Austin would sit in front of us, it would plunge off to the right, the McVeigh plunges to the left. Previous mine workings are shown in gray. So on the right side, we have mining down to 230 meter depth. On the left, we're 100 meters. All of those dots that we're showing on here are drill holes that we've drilled this year, and they're color-coded by grade times thickness. And so what we're demonstrating is the south plunge, and we're demonstrating the potential for high-grade mineralization below any mining within the McVeigh horizon, and quite shallow. I will highlight on this slide on the left side, you can see the McVeigh portal and ramp decline. That portal and ramp is in place. That is what we're permitting to reopen, and we should have those approvals again in December this year. That will give us access to the underground, and it'll give access to the mineralization that we're discovering underneath the mine workings. We'll zoom in on the left side there, just to give you a flavor of some of the results that we've put out this year. You can see 11 grams per ton over 10 meters. We've got 50 grams per ton over 4 meters, just over 30 over 3.7 meters. Some pretty stunning results, well below the mine workings. We continue to step out on this mineralization, pushing it down towards depth. At the end of the day, we suspect it'll end up similar to what we see in the Austin, which historically was around 4 to 6 meters width, and historically had an average head grade of 10 grams per ton. So I will talk very briefly about the Austin. The Austin shown here, you can see that rightward plunge to it. Again, open to depth. As we started to drill more and more through the Austin and into the McVeigh, we started to understand better what was controlling mineralization. And you can see some very pronounced gaps on here between some of the mineralization up and down, and we could explain that geologically. And what we observed was we felt we had another gap developing here and potential for another rod of mineralization, if you will, on the south end of the Austin. So we tested that about 6 weeks ago, and our first hole into it returned 8 meters at 25 grams. Second hole was 1 meter at 17 grams. We've got a couple of historic holes on here. The deeper one, 11 dash, ran 10 meters at 18 grams, and the hole above that was about 4 meters at 40 grams. We call this the A3 target. It sits on the south side of the Austin, and again, it's another example of the opportunity that presents itself within a past operating mine environment. This, again, is right in the footprint of the proposed infrastructure with respect to our economic analysis that I'll talk to in a minute. So if we step back and look at the property package, we're also looking at kind of working from the outside in and looking for what other opportunities there may be on the broader property. We talked about the Austin and the McVeigh in the Madsen mine, sitting here right in the heart, in the heart of the property. We started to map those Austin and McVeigh horizons at surface, and they're very distinguishable. And we mapped them to the south towards the Starrett-Olsen mine, which, if you recall, we also own. It operated for 8 years and last mined successfully in 1956. We could trace the Austin and McVeigh all the way to the Starrett-Olsen mine. It's about 2.5 kilometers. There's not a lot of data left from Starrett, and we did manage to recover some of the geological mapping. We saw the same features we see in the Madsen mine in terms of those controls. Look very similar to the Austin and McVeigh. So what we did is we put the first drilling in here again about 2 months ago, and our first result here shown on the right side of a long section up in here ran 11 meters at 34 grams. Pretty fantastic result. It sits about 300 meters below past mine workings in the Starrett-Olsen mine. The Starrett mine was mined much more shallowly than Madsen. It used to be held by a different operator, and they pushed it up to that company boundary. So on the bottom there, you see a long section running across from the Starrett-Olsen mine to the Madsen mine. We can see the rightward plunge on the Madsen mine. You can see the Starrett-Olsen mine. We see the same thing there with opportunities lying between Starrett and Madsen. When combined, you're looking at a 5-kilometer expression here of a high-grade gold system that's in place. We've got 2 successful mines that operated there, and the gap between Starrett and Madsen we think is ripe for an exploration discovery. It's where we're projecting the McVeigh, and it's where we're currently targeting, and we feel it'll be the heart of a future mining operation at Madsen. So if we talk about that, this is a PEA that we released in April this year. And what we wanted to do was really establish kind of a base value of the property. So what this takes into account is the existing infrastructure, the existing resource, but does not take into account any of the drilling that we've conducted since we acquired the property. So this is using that in situ 1.2 million ounce resource. What we wanted to do here, our goal or objective, if you will, was to minimize upfront initial capital. So we took a little bit different approach. We said, what if we take that existing ramp that now goes down to 150 meters and drove it down to 600 meters? Let's have a look at what portion of the resource we could capture within that top 600 meters. In doing so, we were not looking at any kind of refurbishment of the shaft. We were looking at refurbishment of the underground drifts. It was new ramp development to access that resource. So what it did is it captured about 1/4 of the resource. We see a mine plan here that's 6.5 years. It's 260,000 ounces. It'll produce about 50,000 ounces a year at a gold price of $11.75 US per ounce and an exchange rate of 1.25 US dollar Canadian dollar exchange rate. We pay back in 1.5 years. The initial capital is 20 million, which is extremely low. But why is that so? Well, it's because we already have a mill. We already have a tailings facility. We already have a ramp that's collared in place and down to 150 meters. So that capital is about 3 million to put the mill back into an operating state. Most of it is ramp development. Very robust IRR and NPV and fairly conservative metal prices. This is a base case, and I would call it our worst case scenario. This is if we don't discover another ounce on the property. I talked about the the potential of the McVeigh. I talked about the new A3 target. I talked about intersections that we're having on the Russet South target, up dip of the 8th zone near surface, and then we step 2.5 kilometers to the Sterret-Olsen mine, and we're having success in intersecting high-grade mineralization near surface at the Sterret-Olsen mine. Any ounces that we can add through our drilling program is immediately accretive to this study. So our goal over this year and into next year is to build on that resource. We want to take it from 260,000 ounces up to beyond a 10-year mine life and more. If we add 700,000 ounces of mineable material there, we would have 1 million ounces of mineable. That would allow us to look at the mill and optimize its throughput. The mill is a 550 ton per day mill, but our permit allows for 1,089 tons per day. So we can move that from a 50,000 ounce per year producer to a 100,000 ounce per year producer with the right resource base. So what you'll see us over the next year continue to do is be aggressive. As I said, we're opening up the underground. In January, we'll be underground. We'll launch an underground exploration program. In addition, we'll continue to step out from surface to push the boundary of the McVeigh, to trace that gap between the Sterret-Olsen mine and the McVeigh horizon, and to try and identify potential resources beyond what we see from the underground. We will be looking to update the resource about mid-next year, and then we'll follow that up with revision of the PEA, or depending on the size of the resource, we move it towards pre-feasibility and feasibility. What you can see here is there's fantastic potential on this property to grow the resource. It's in the heart of a project that has existing infrastructure, that has an existing high-grade resource, that has a permit to operate the mill and tailings facility. And so we feel that we're in a very good place as we move the project forward. So with that, I'll wrap it up, and I want to thank you very much for taking the time to listen to the story of Pure Gold.
Thank you very much, Darin.